What's up, traders? Hope you're having a good start of the year. There's been a lot of dip buying opportunities in Bitcoin, and this video is going to show you what I put together to help you find them. And why I'm just giving this away is because I happen to be a real trader. I make my money trading, and I don't need your money. So if you really like this stuff, like, share, subscribe, or don't. I don't care. I do this genuinely to help people, not to sell any courses. Here's what I put together. This indicator will help people to identify big volatile bars like the one right here. And there's nothing magical about this. This is measured by using the average true range. Now, average true range, what it does is it takes the bars in the past and measures the high to the low to determine the average height. And then what happens is when you have a bar, like say this one, that is much, much bigger than the ones in the past, it triggers this highlighting and also gives in the label the amount that it's bigger than ATR by a percentage. Now, by default, the settings in this indicator, which I'm going to link by the way, it evaluates back 26 bars. Why 26? It's a magic number I picked out of the hat. I won't go into it, but that's just what I use. You can use less, you can use more. It's up to you. The next default value was 300%. In other words, we're looking for a bar like this one or ones in the past that are more than 300% from the average true range. In other words, they're 300% bigger than bars in the past 26 bars. That way we know that this is a significant movement in the market. Now we can change this if we want to. We can be a lot more stringent and we can change this to say 400%. And if we do that, then we're going to maybe miss some opportunities, but we'll also eliminate some potential false positives. Now, you'll notice how this highlighting does not have a label. Well, that's because TradingView doesn't draw each label every bar. Otherwise, the chart might become very cluttered. So what you can do is you can use the bar replay to go back, do a little back testing, and also see what the label would have been then. So this one would have been a 542% of ATR bar, big old bar right there, which was also a dip. Let's look back a little bit further. Here's another one. This one right here was 694. So again, that was a good potential dip buy right there. So we don't have to set it to 300. We could set it higher, but 300 is just going to be the baseline I'm throwing out there to get people started. Now, let's set it back to the default values. And here's the next component. We're going to set up this indicator to alert us using TradingView's alert system. So all we have to do is go up here to the create alert, and we want to change the condition to the indicator. And of course, we've got our default settings there. If you change the settings on the indicator and then you go to create a new alert, it's going to select it for you here. So make sure you do that ahead of time. There's going to be three options here: any high volatility bar or a buy or a sell. Now, in this market environment, there's only one thing people want to do, obviously, and that's buy. So buy would be the one we choose for now. It may change in the future. We'll see. And then we want to do it once per bar. If we did it once per bar close, then we wouldn't find out about this until the next bar. And we want to try to get it somewhere while this bar is live. And when it hits the threshold of 300%, which probably would have happened somewhere around in here. And so that would have given us an alert right when this was live. We want to leave this open-ended if we can, if we have a premium account. If not, we'll have to go back and reset it. But the other thing to remember is that we need to set up these alerts for each time frame. And it may give you a little warning here because it uses labels. That's why it redraws. But other than that, it does not redraw. So I recommend doing this on the 1 hour or the 30-minute. I know there's going to be some people out there that want to do this on the 1 minute and the 5-minute. And just as a word of warning there, well, you're going to have some 5 minutes show up as dips, but they won't really be dips. So the lower you go, the lower the probability that this is going to work. That's your warning. Again, 30-minute would be the lowest that I would potentially want to look for this. and the hour is really what I want to recommend. And you're just going to have to be patient because these may come once a day. These may not come for a few days. Now, there's one more very important component that's going to help us filter out the good from the bad. And this is actually a fundamental component to cryptocurrency that you need to look at once you get one of these alerts to confirm it. You want to look for other people to be in pain. What causes a lot of these dips are forced liquidations. People getting forced out of a position, otherwise called margin call, or in the crypto world, getting wrecked. And there's a lot of different ways you can look for this data to know when positions are being closed. But the easiest one, and I'll show you right now, is to use this Twitter account right here at bxrekt. This follows the BitMEX exchange and the data available for their liquidations. And what we can see here, we go back about 14 hours to the time when this bar was going on, this 5 a.m. January the 4th bar. At 5:18 a.m., someone that had a long position worth over $8 million was forced to sell. The exchange sold for them at 28,145. So 28,145 means that they were long and they had their position closed somewhere down here. Oh, that's XBT because that's their own symbol. But somewhere right around the bottom was where they got force closed. Now, doesn't that suck for them? Well, that's what happens. That's what creates these big dips is people being on too much leverage and getting force closed. And what's really cool about this Twitter is it kind of makes it visual for you where you can go through here and you can see this morning where we saw that big 5 a.m. bar. You had a lot of these liquidations all come in at once. This is what you want to look for. And it really helps to have these, hundreds and stuff like that. Along with some pretty funny things right here. We trade, we degen, we lose it all, and we make it back again. Look for these. And as you see, there's a cascade. And that's what you're seeing when you see these bars move, is a cascade of stops being triggered as people get wrecked. So if you aren't following this, this is going to be your extra confirmation for when you get an alert that you have one of these big bars come into the market. And you can actually use this on other things, not just Bitcoin, but you'll probably want to find the liquidation data somewhere else. I did have someone contact me today and tell me that they were able to use this trading QQQ on buying the dip. So that's the beauty of ATR is it can be used on multiple instruments. It's just a normalization of volatility across anything that you want to trade. So hopefully this indicator can be useful to anyone on any instrument. And again, it's free for everybody to use. If you want to learn more, just keep watching. Next video, we'll talk a little bit more about risk management, but this should get you started looking for these opportunities. Be smart. Don't get wrecked. We'll see you in the next video.